You might have clicked on this presentation because MongoDB stock is trading down 20% today following their earnings call, but that's not what we're going to talk about today. So we will touch on the earnings call, but we're largely going to focus on an information issue surrounding their investor relations. So before we get into that, the reason that we've been looking at MongoDB is because we want to get more exposure to the growth of big data. So we have 36 tech stocks right now. There's 4 open slots in our portfolio, and we're certainly not itching to fill those. But now that the market is in a bear, there's an opportunity to purchase quality companies at a discount, and we'd like some more exposure to the growth of big data. So people can talk about the potential of AI all they want, but AI algorithms are only as good as the big data that you feed them. So data is a very important part of everything moving forward. And here's some recent pieces that we wrote looking at this thesis. So we have Pure Storage, that's a hardware play on big data, though they also have a as a service offering, which is now I think 30% of their overall revenues and growing. We looked at Snowflake. That's a very appealing firm, but also has been historically overvalued relative to other SaaS firms, and that overvaluation is because it's expected to grow rapidly over the coming years. And then our most recent piece on investing in the explosive growth of unstructured data is what prompted us to look at MongoDB. So when we talk about unstructured data, it's all the data that's being produced, let's say data exhaust, driven by trends like social media, smartphones, IoT sensors, geospatial imaging, and the like. So it can't be stored in a relational database, though that's debatable because there's this notion of semi-unstructured data. But 80 to 90% of data today is unstructured. 90% of that was created in the past several years. Only 10% of it is being stored. It's growing at a rate of 55 to 65% annually compared to a 12% growth rate for structured data. So the idea is that if unstructured data is growing so much, why don't we try to get a piece of that growth? And particularly that this opportunity doesn't necessarily cannibalize relational databases which focus on structured data. So the idea was that we'd look at this technology called NoSQL, and we've listed some of the advantages on the right-hand side here. NoSQL is expected to grow 30% compound annual growth rate, reaching $25 billion by 2027. And according to MongoDB, adoption of NoSQL databases is primarily driven by developers who find it easier to create various types of apps compared to relational databases. And that may be true, though we've heard some various opinions from developers as to whether or not NoSQL offers the sort of advantages that they claim. So when we looked at this opportunity, we wanted to find the leader in NoSQL and take a look at whether or not they'd be a worthwhile investment. So when we took a look at Gartner's Magic Quadrant for cloud database systems, you can see it here, MongoDB wasn't on there. And the comment Gartner made was that even though their market performance is outstanding, this vendor did not respond to requests to participate. And that was the 4th or say 5th consecutive year in a row they tried to get MongoDB to participate, and they didn't. And whilst you could argue that's because they're busy executing, when we dig into the firm a bit, it may be a different reason, which is that they don't really put a lot of focus on basic investor relations. So one of the reasons that we wanted to look at MongoDB, aside from the thesis we laid out about the growth of unstructured data and NoSQL addressing that, was that an article by VentureBeat described the world's hottest trio of big data firms, all aspiring to become the next generation default enterprise cloud data platform. And they listed out Snowflake, Databricks, which is private, and MongoDB. So just based on that alone, it's worth looking into whether or not this company is something that we want to hold in our own portfolio. But when we started digging into the firm, we encountered an information problem. And this is something that we've been coming across recently with firms like Cognex and Altair Engineering. And the problem is that they just don't provide the most basic information for investors, such as quarterly decks. So whenever there's a earnings call that happens 4 times a year, there ought to be a deck that's produced that investors can download and look at, not just a press release. When they have the earnings call, they would then go through that deck. That's pretty typical, but we don't see that with MongoDB. Nor do they have any sort of generic investor deck that can spell out the value proposition for investors. What they do have, you can see here, are a number of presentations. Last year, they had just one on corporate sustainability. And when you thumb through that report, you can see that they have a lot of overhead that they're spending on largely useless initiatives, such as divisive employee resource groups. This report should be axed in favor of better investor relations. So we look at the other 2 presentations they offered up in 2022. One is around marketing. So that was 8 pages of their new CMO talking about how they have need to correct this outdated perception among the technology community about what they actually do. Then they have this product presentation, 67 pages. It's supposed to be for investors, but it seems quite verbose and not generally accessible to a broader audience of investors. And we tried to thumb through it and extrapolate what they were trying to say. And generally, it was around these 3 items. So they want to make it easier to migrate to MongoDB. Well, this kind of goes against our thought that they would be addressing this large blue ocean total addressable market that was independent of what happened in the relational database world. But we see them here making a very big deal about this migration tool that they're largely going to be using internally. And then I think in next year, they'll be releasing that for the public to use. But that didn't make too much sense, because they then go on to talk about how they're, addressing different workload types and things like analytics and time series analysis will be addressed. And this is just like the bread and butter of relational databases. So why would you move your relational database to NoSQL and then not have these particular use cases that you could fill when you were already filling those? So it just seems odd. Aside from the support for unstructured data, it seems odd that you would just migrate over a relational database and then kind of look to do the same things you were doing before with relatively new tools on offer from this firm. And then they talk about supporting new application architectures like serverless and the edge. But largely, when we look at this company, we don't see enough information that helps us understand how they're progressing. So basic metrics we are able to collect. Well, they sell 2 product flavors. So one is MongoDB Atlas, that's available via all 3 major cloud providers, constitutes 56% of revenues. Then you have the on-site solution, MongoDB Enterprise Advanced. And Atlas, their cloud solution, is growing every quarter. It commands more and more of total revenues. No single customer accounts for more than 10% of their revenues. Half of fiscal 2022 revenues came from outside the States. The majority of their subscription contracts are 1 year in duration. And they say their net ARR expansion rate has consistently been over 120%, but they don't provide any granularity. So typically you'd see that mapped over time. That simply shows the additional spend from existing customers over time. What's also nice to see is gross retention rate, which reflects cancels. And then the only SaaS metric they have that's meaningful is this one that we've charted over here on the right, and that's the number of customers spending over 100K annually. And usually firms will then provide follow-on buckets. So maybe it's, customer spending over $1 million, and then you can see how they're progressing. That shows you that this can scale for large enterprises. So they're really not providing SaaS metrics that we would need to see to evaluate a SaaS firm. And that's, of course, accompanies the problem of them not providing quarterly investment decks either. So we just found the lack of information to be rather disheartening. Now, when it comes to survivability, they're certainly doing okay there. They have $1.8 billion in cash and short-term investments. That's offset by $1.1 billion in convertible notes due in 2026. At last year's burn rate of around $300 million, they got a runway of about 1.5 years. So that's not that long, actually. Gross margins around 70%, which means a path to profitability should easily be paved, but it's not something we see the company talking much about. And they ought to, given that we're in a bear market. But at the lower end of their guidance, MongoDB should see 34% growth this year. That would take the revenues from $874 million in fiscal 2022 to $1.172 billion in fiscal 2023, which we're in right now. So that's certainly some very healthy growth. And of course, that comes with a valuation to match. Now, these numbers would have been adjusted today as the market sinks. So Mongo's valuation here, we've calculated that by market cap divided by annualized revenues. This is a very simple method, what we call our simple valuation ratio. It's a simple method of looking at valuation for growth stocks, which never have positive earnings because they're busy capturing market share. So you can see how highly valued Snowflake is, and certainly MongoDB would be up there as well relative to other firms in our universe, though these have corrected today. So when we talk about the importance of investor relations, we won't invest in firms unless the metrics are there. Why? Because we have an audience of readers and subscribers that want to know why we take certain actions, and we're always transparent about when we invest in a firm and why, and when we pull out of that investment. And if something goes wrong in a company and we don't have the metrics to see what's happening, it's very difficult to explain, and it starts to remove the transparency that allows us to operate the way that we do, which is to tell people exactly why we make the investment decisions for our own portfolio that we do. So we tried to look up and see if there was academic research that can show a correlation between a strong investor relations team and share price performance. And there was a mixed bag. What we would find were some studies, maybe one conducted in China, one conducted in Germany, some conducted in the States, largely showing that investor relations is good for the share price. In this particular article in CFO Magazine, the link between good investor relations and stock price did a good job of kind of explaining or giving some examples of that. But it's our belief that firms need to provide key metrics, especially if you're a software as a service firm, that will allow investors to gauge health over time. So just to conclude on MongoDB, the lack of metrics makes monitoring their health difficult. We're not convinced our original thesis surrounding the growth of unstructured data and NoSQL is completely accurate. Based on what we were thinking before. That's after doing further research and hearing from a lot of individuals that use these solutions. It's not a firm we'd invest in. We'll keep on looking for ways to play the big data theme. But if you're thinking about investing in MongoDB, probably not a bad idea to purchase shares today because they managed to beat expectations. They raised guidance, yet their shares are down 24% as of now. So whenever that happens, and that's why we did this research piece prior to earnings, because if it turned out that was a company we wanted to hold, then usually, lately, we've been seeing companies get punished regardless of what sort of earnings they have. And you see that today with Okta and C3, among others. So we try to do the analysis prior to an earnings call. And then if shares take a dump, as they are prone to, then that's an opportunity to open a position. So if you're thinking about adding shares or opening a position in the company, today is probably not a bad day to do that. And of course, you should use dollar cost averaging and not try to time the market. So please put your comments in the comments section. Make sure to subscribe to our video. Please like the video. That will help it spread more on YouTube. And thanks so much for taking the time to listen to this today.